Hello, ladies and gentlemen. Gentlemen, today I have the privilege, and I mean that sincerely, to host someone who doesn't just lead operations; he's redefined them. Uh, and today I've got the privilege to dive deep into the acquisition, which uh, recent acquisition which happened with EY, the top gaming company, and who better than Kevin Gaylord? And I have the real privilege of speaking to him, and he's going to explain this acquisition in a real easy manner. So Kevin is one of those rare executives who can take chaos and turn into clarity, complexity, and turn it into a momentum. From winning Stevie Awards to transforming CRMs worth millions, and from leading during crisis to architecting scalable excellence, Kevin has done what many only write about in theory. So he's not just a leader, and he's a living blueprint of operational mastery. And I can go on and on and on in his praise because he's the best of the best. And on my request, in a very short time, he has agreed to explain this acquisition. And today we get a chance to look inside the mind of a man who's built growth, alignment, and culture all at once. So, mm, welcome, Kevin. How are you today? And thank you so much for coming to the Shaq podcast at such a short notice.
Good morning, Shaq. Once again, great to be here. We've been here several times before. I enjoy being on your show. I enjoy watching your show. You have fantastic guests, and uh, this is an interesting one to talk about. It's a pretty big deal, so I'm excited to be here.
Thank you so much, Kevin. Thank you so much. So, uh, just a small review, a small trailer for what we are going to speak about. Electronic arts. Today's topic is the acquisition of electronic arts, the EA. I mean, the real EA behind FIFA, Madden, and Apex Legend. So this is a gaming company, and it's reportedly in advanced talks for a 50 billion buyout. That's right, a $50 billion buyout, and it is one of the largest leveraged buyouts in history. But I think, Kevin, you agreed, right? This is the biggest buyout in history.
In the gaming sphere. It is the largest in history. Yes. Uh,
Yes, yes,
yeah.
in the gaming sphere. And you know, quickly diving into this topic, interesting topic, Kevin. Let's start with the basics. EA's potential buyout by Silver Lake, Saudi Arabia's public investment fund, and affinity partners has already boosted EA's stock nearly 15%. But beyond the numbers, what does this mean for the future of the gaming and the business world at large? And uh, please help us understand about this buyout and what's happening here.
Sure. So, I mean, the 15% lift, I think it's 14% as of this morning, is it's expected. You're getting a huge cash infusion for Electronic Arts, right? So whatever they've been carrying to date in terms of financial weight, challenges, opportunity, whatever it is, they're all of those things are eliminated overnight, right? Hey, we've got all the money in the world. Uh, it's in terms of how it affects the marketplace specifically. It further, I don't even want to say it legitimizes it, further legitimizes uh,
Absolutely.
electronic or games, right? So electronic games and electronic sports and what's the other thing?
gaming. I mean, say these
It,
the games. So
it we've known for at least 3 decades now that this form of gaming isn't going anywhere. It just grows and grows and grows. And with multiple generations now, it was right. So this was sort of new when I was a kid. We still had to go to the arcade and play games. But as soon as we got the Nintendo, I mean, our Ataris, whatever. But when we got the Nintendo in the house, it was, oh, it's a game changer. Well, it went, started go streaming. So beyond the cartridge or the CD or whatever it may be, when they started streaming and you're playing on just about any device, your phone, your computer, your PlayStation or whatever device, it really, 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 really changed everything, uh, you know, culturally. So that this is, I mean, it's one of the biggest industries, period. I mean, it's stacked up there with healthcare. I mean, it's massive. So seeing a deal where I think it's actually going to be about 55 billion is the number, where you have these private equity businesses doing a staggeringly large cash infusion, uh, tells us two amazing things very quickly. One, that the gaming world not only is here to stay, but that it's a good investment. So I think we would expect inside of the next maybe 2 years to see more of these. Maybe not quite this size, but I think you're going to see more companies starting to merge together, more private equity focus. I'll bet even now, I'll bet you there are tons of PE firms that are looking at gaming companies very closely. So I think this immediately changes that landscape. Um, and then additionally, I think I think that's a very positive thing. On a potentially negative side is I think it probably, this is, I'm saying my opinion. The first part is almost certainly going to happen, but I think what you're going to see is a change in what games look like in the next several years. And what I mean is, I think certain aspects of creativity will start to fade away, as unfortunately tends to be the case when you have private equity investment. There's an expected return annually. It's aggressive, and so the things. So Electronic Arts, yeah, they've got the big three in their arsenal that are just behemoths. But they've got a bunch more, right? And we've got a ton of other things. And I think a lot of those things that are struggling, that maybe if they kind of hung around and gave them a chance, they could really be great. I think a lot of that, unless they're able to create a new or more aggressive growth model, I think a lot of those things are going to go away, because anytime you have a merger and acquisition, or a cash infusion like this, you're going to look at growth, and you're going to look at reduction of expense initially through sort of synergies and some more positive things, but pretty quickly it's going to be, hey, we want to do an analysis of what everybody's doing, what every project's doing, and how they're performing. So I think you're going to see both things. I think you're going to see a boost in the gaming field, but you're also probably going to see a loss in the way of creativity and some of the more cutting edge things that it's kind of like if we look at cinema. The movies that generally get the most money either A, have an A-list person that you're paying a gazillion dollars to, or B, and we see sadly so much of this, it's a remake of something that already made money, or it's a sequel to something that already made money. And I think in the gaming world, you're going to just see that. Madden is actually a great example. Is a game that just, right, it's just a new version every year, and they make gazillions out of it. But it's not a new thing. It's slight enhancements year over year, kind of like the iPhone, I suppose. So
exactly. That's I mean, say I absolutely agree with you on that, Kevin. To be very honest, especially me, as a normal person who used to work for a corporate job for a very long time, I cannot imagine the money involved. I mean, say $50 billion. That's a lot of money. To be very honest, I mean, say if we get a package for $100,000 per year for our software jobs, we would be happy like anything. But now the current market situation is we don't even get that package right now. But $50 billion, and when we are speaking about this acquisition and buyout and everything, with all the real, I wouldn't say all the real players, but big players from other countries. Kevin, do you think that people from Saudi Arabia, I mean, say that's a public fund? I think it's Saudi Arabia puts something is there. Let me check.
It's a
Uh,
public investment fund. Silver
yeah,
Lake, you're talking about? Yeah.
public investment fund. Uh, well, this is out of context question, but uh, do you have any thoughts why they are investing into the U.S. market, or why they are investing so much of money for this company? Any thoughts on that quickly?
Sure. Well, I mean, it's just common sense. It doesn't have to be the U.S. market, but when we think of who's spending the money, I mean, the one thing about the United States, and you can cast this in a positive or a negative light, but I mean, we are consumers, right? We buy and buy and buy and buy, and as there's a whole mechanism involved there. So we have to make more money because we want to spend more money, and it's the heart of capitalism, and that's a whole different conversation. But for Saudi Arabia to invest in something in the United States is very common. They uh, they invest. I would argue with no data to support this. I would argue that the majority of their investments are aimed at the United States because that's just a smart investment. It's tried and true. We every so often we'll have a recession, but geez, even in a recession we spend money. So it's just a smart investment. I think that they will do very well through the course of this podcast. I'm going to have uh, some thoughts that probably will sound different from what I'm saying right now, but I think overall, you know, back of the envelope math. So I did this. This is, and I'm not speaking specific to this deal, but if we just say generally speaking, a private
Mhm,
equity investment, you're very, very generally saying we're looking for approximately about a 20% growth model in about
mhm,
5 years. Okay, so lots of abouts there, but so if we say it's a 55, I did some quick math here, $55 billion investment. Assume year one you're expecting nothing. Then you're
mhm,
looking at approximately 5% growth year over year over year over year. At year five, that same business needs to be at least $66 billion for the return. So that is $11 billion of minimum expected growth. So if you look at it that way and say, okay, we're going to infuse $55 billion in this, and in 5 years we're going to get our 55 billion back plus another 11 billion at a minimum. That's a pretty darn good model. You're not going to get that kind of return many places. Now, I'm sure with this size, and that's just sort of that standard private equity talk. With a deal this size, I'll bet it's much, much more aggressive than that, and also probably not as fast. I don't think they're looking to get out in 5 years. I think they're looking for something like, hey, we'll take our 11 billion in 5 years, but we want returns and returns and returns, for forever. So it's a little bit different, but just generally speaking, I think that's what you're looking at. And when you start talking about that kind of growth and that kind of a return, yeah, why wouldn't you do it?
exactly, exactly. I totally agree with that point, and that's a huge point. To be very honest, they are not looking for a short-term investment. They are here to stay. I think, according to my well, I'm a person with little talents, but according to my calculations, they are here to stay. They are here to stay, and I mean, say if they are investing so much, they are smart people as well. They are selling oil to the whole world. So they are looking at the bigger picture. It's according to my calculation. They're looking at the bigger picture. They are not for a short term. They're in for a long term, I think. So, Kevin, moving forward quickly,
Mhm.
I have some questions lined up for you. Also, before those questions, completely on this acquisition and on this buyout, but the questions are based on EA only today. So before going to that part, I mean, say we also have to, you know, to be very honest with you, sometimes what happens is whenever these kind of restructures happens, you know. Um, whenever private investors take over, restructuring often follows.
Sure.
And Kevin, uh, according to you, what kind of internal shakeups do you think EA's 13,000 plus employees, I'm talking about 13,000 souls, employees might face, and how does leadership prepare teams for that kind of uncertainty?
Yeah. So, all right, we're gonna. This one's probably gonna lead into other things, but 13,000 employees. The first thing, when I jotted down the 5-year return estimates, the first thing I wrote in my little scratch pad over here was, uh, year one. Well, of course, nothing year one, but by year two, to get a 5% growth in year two, it takes a little while to get some traction. So my notes, I just wrote, these are generally savings from operational cost synergies, right? So this is the beauty, or I mean, depends on which side you're on. It can be considered a negative, but the one of the things that makes these PE deals work for these aggressive returns is, okay. So it's Silver Lake and Affinity. Well, I don't know anything about Silver Lake, but Affinity has got their hands in dozens upon dozens of different things. I think that it's Jared Kushner's thing, isn't it?
I think so. Yeah, I think so.
But it's so they've got lots of businesses, which means right now today, Electronic Arts has got a full everything. They've got a huge HR staff, including all the recruiters and everything else. They've got a huge IT team, not even tied to the gaming piece, right? Just tied to things like managing their CRM and their ERP and email and all the internal things. They've got janitorial staff. They've got everything. I don't know, a million different things. Marketing, huge marketing team. I imagine
Exactly.
billions of dollars in marketing. Well, as they make this connection with Silver Lake and Infinity have these things. So you're going to immediately sit down, right? And this is, I don't want to go on a tangent. They're going to immediately sit down and say, okay, within this, what do we have that we have redundancy on? And there's going to be a lot, right? So you're going to probably, and this is all guess. I don't know the makeup of these companies of Silver Lake and Infinity. I don't know the makeup of any of them really. But assume that they're going to say, well, all right, we already have a hub for HR. We have a hub for IT and security. We've got a hub for marketing. These things are fully developed. Maybe we keep a couple of people from those teams to to bridge the gap, but we're not going to need, maybe they've collectively got 100 different companies, under their umbrella. Well, you don't need 100 different HR groups and 100 different marketing groups and 100 different, So at some point, you if you're going to do a good deal, and anybody that can afford $55 billion to put into this is obviously knows what they're doing. You're gonna start to combine those things. So I would expect if you are in a support team like the ones I've listed, that and you're not in an absolute critical role, you're
Mm.
definitely shaking in your boots right now, as you should be, because very likely there will be substantial cuts. They don't tend to happen in the first 2 weeks, but it's pretty fast after that. So I would
Yeah.
say before the end of the year, well, I don't know when the deal closes, but let's say it closed today. Before the end of the year, I would think you would probably see of those 13,000, a couple thousand would be gone. Um, and they may hopefully they'll offer them packages, severance and so on. But even within that, it's not ideal. I mean, that's the downside of doing this is you almost always. I don't think we've ever seen a major, M&A situation where you haven't seen substantial losses. So that's certainly coming. What's scary, and those folks certainly are aware of it, although they're probably not being told that yet, but I'm sure they're aware of it. The sort of next layer that is of concern, we talked about a little bit already, which is, you have their platforms that are not there. So they're big money makers. You're
Mhm.
not going to see a lot of cuts. The guys working on Madden, you're not going to see,
That's
FIFA, you're not going to see big cuts. Maybe some, but I wouldn't say anything too aggressive. But all those smaller ones are going to, while they won't get cut right away, I promise you, they are already being scrutinized right now. Before this thing, they've been looking at them. Do we need it? What's the potential? And somebody, and I'm not saying this is a good or a bad thing, because in the big picture, if I'm on the buying side, I agree with it. I want my return. That sucks that people get impacted by that, but that's how it goes. So so they are undoubtedly already looking at coming to an agreement. Okay, we'll keep this layer around, provided they can produce X in this time frame. If they here are the cuts that are going to, I mean, this stuff should be mapped out, right? So electronic arts today, if we can fast forward 18 to 24 months, the odds are that 13,000 of the exact people that they are is probably something more like 8,000.
Mhm.
And probably not exactly the same 8,000. There's going to be a lot of change. Some of that is through, them stipulating that these positions have to go, and some of that is through the response to the employees. So if it is handled like, sadly, most of these things are handled, you're going to start seeing within 6 months of completion, you'll probably start seeing uh, substantial morale issues, um, much higher turnover rate, and now you're bringing in a different group of people, and it's just, your whole culture is going to change. Well, the culture is going to
Exactly.
change, but I think that's going to drive
Exactly.
it, and that is just the unfortunate reality. I do want to say it can be avoided. It never is, but it can be avoided through
Mhm.
all the stuff that all our other, you go back and look at all the podcasts you and I have done together and things we've talked about, through all that stuff. So absolute transparency and communication and actually giving a damn about your teams and talking to them, engaging them. You know, the private investment, private equity folks here are likely to never meet the employees. They're not going to know a thing about them personally. They're not going to have relationships with them. That's part of the model. It's just statistics. It's just, are the numbers right or are they not? Who's doing it? If you're not getting it done, swap this person out and so on. And as we've talked about many times, how I personally feel about that is I think that is it is a sad avoidable loss. And generally in these situations, I think it is, I'm going to say, in my opinion, it is the number one mistake that gets made over and over and over again, that you don't ensure. I would rather see the private equity folks say, I want to know who is driving culture post merger. who is driving employee retention post merger? What's that going to look like? Maybe we bring in some experts, bring in some people to guide this, because the lack of that translates to all kinds of bad stuff. And unfortunately, my opinion is this is going to be the same as so many other, cash infusions where you're going to see that level of negative outcome. Now, you may not see it at the game level. As a casual video game player, you may not see it. But if you work for this company, you know, if you work for the company, or if you care about the more creative, esoteric products of the company, you're gonna see it, and you're gonna feel it, and you're probably gonna have a pretty negative experience, a pretty negative outlook. Um, for the casual game player, you're not going to notice it so much. For the investor, you're going to love it, because you're going to make money. That's what they're going to do. So,
Exactly, Kevin. The investors will love it, but sadly, the sad part is the people who are working there, people who will lose their jobs. It breaks my heart to even to speak about that.
yeah,
To be very honest with you, I've been a part of the corporate world before, and I know how it feels. Sometimes what happens is uh, it even feels it feels like uh, sometimes there's nothing else to. Say we lose our jobs, we think that we are done. That feeling comes, and it's very sad because people are already in dire consequences, kind of, say,
sure.
because of the inflation, going on. And say, uh, I does not intend to ask you this, but with your expertise, if I ask you, if say, just imagine a situation where you are leading this acquisition or merger or this buyout, how would you save, say, at least at the maximum, how would you try to save, or how would you try to avoid these layoffs, try to save some people at least? Say 13,000 people are, say, a lot. To be very honest with you, it's a lot of souls. It's a lot of people who wants just to work and get back to their home. Hardworking people. It really breaks my heart. Or if I have to rephrase the question and ask you, what advice do you have for these people sitting on the high end tables in the boardrooms, where we can avoid and create a win-win situation for both the parties?
So, I've been in, not on a scale like this, but I mean, I've been in these meetings, and uh, I can tell you that the only thing that's really being discussed has to do with reduction in expense and growth in revenue. So, uh, I think that what needs to be introduced into the conversation is how, right? So all the accountability, you have the people that are providing the money. All the accountability falls on the electronic arts team, on their leadership team, or whoever they're keeping in place in that. So the questions I would like to see come up is exactly how are you going to guarantee that you maintain? I mean, look, you've got, I don't know how long arts has been around. When it gets about 30 years now,
Exactly.
close to it. So you obviously have a corporate culture. What exactly are you going to do to make sure that that persists? To make sure that getting $55 billion isn't going to, or in this case, it's actually the net is about 20 billion uh, that they're gonna receive as debt. But what are you going to do to make sure that this doesn't change the stuff that's working? And also, I think really, 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 I like to take high level ideas before you start getting into minutia and say, okay, let's not. One of the things I've seen personally is this sort of it's not ideal to talk about money with people, but when you're talking about job security and you're talking about the future and longevity of the business, and you're talking about I imagine that the employees, I don't know this, but they may have an ESOP or a stock option plan, something embedded in there that I'm going to want to know not only about job security, but also about what is the financial plan that comes with taking on $20 billion of debt? Because that is literally the number they're saying is you are going to end up the minute this thing is signed. Yeah, you're going to have lots of money, but you are going to have $20 billion of debt. So if I own stock in the business, or even if I don't, I'm just an employee that's invested in the future of it. I'm going to want to know what is it that we're up against, right? So let's just say those numbers that we talked about earlier that are make believe. Let's say, well, so it's 2025. So by 2030 or 2031, we need to grow $11 billion a year. For the love of Pete, I don't know why people don't just share the information. Everybody treats this so, I understand it's not meant for public consumption, but I think they're to just be honest and say, look, this is what we're up against. We're going to take this on. And in response to that, we have to deliver this. Get everybody buying in to that same effort, and I think you're going to have a much better turnout. That's my opinion.
Exactly, exactly. I totally agree with you on that point. First of all, I mean, say, to be very honest with you, when you're buying, when so much of money, I mean, say, huge amount is involved, why can't you be honest,
Yeah.
telling everything to the people in the public domain? So, yeah, I absolutely agree with you on that. And sadly, it can't be avoided, but but if there are some people who are sensible enough and also ready to consider the humanitarian aspect, they can avoid a massive damage to human lives. Damage in the sense, I mean, say, they can save some jobs, even if they have to lay them off with dignity, with severance package, with a kind of severance package that could cover up to 6 months or a year. Also, there are options to put them on bench and let them, kind of things. Uh, uh, I will go on to the next question, but quickly, can you tell about the severance package if you can?
Usually that will be considered in the deal. So embedded in this $55 billion is, I mean, some of this is pre-planned, right? So they're going to say, those 13,000, like I say, I'm going to guess a few thousand are probably going to go. Whatever the number is, they've already negotiated internally what they're willing to allocate for that. So there are people that immediately after this is signed, the next day, that are going to receive packages. So I went through, I think I mentioned this once before. I went through this with AT&T and Bell South here in the United States. I was a director for Bell South in I don't know, for several years, but in December of 2006, the deal, AT&T acquired Bell South for 81 or $82 billion. And the day, so we had the senior leadership folks, we had a meeting maybe a week or two before the deal closed. That was we're going to kind of prep you for what's coming.
Mhm.
It was high level. We did talk about severance. We said there's going to be packages sent out. We're not telling you who they are. We know, and there was a number. It was a lot, and whatever. And then the day, I mean, it was fast. It was like they signed the deal at 9 a.m. Eastern, and at 10:30 we were back on the phone, and it was okay. Right now, these packages are going out. These messages are going out. These are the people that are getting, whatever. And within 72 hours, it was done. And then we thought, okay, we get it. I talked to my teams. I had about 400 different people, and I talked to them directly, explained what's going on, explained that there is a value in doing this, then I explained why. I agreed with it. It does make sense. A lot of it makes sense. But about 2 weeks in, the next round came. And that's the one that even myself, who was over an entire state, uh, I wasn't made aware. I mean, it caught me blindsided. And that was the next round of both cuts, but not just people, but then it was the weird cuts, right? Like, oh, now we're not going to spend this much on, you don't need this much paper. I mean, it's little things, right? It was like the death by 1,000 cuts, and one of them, and I'll tell you this real quick because this really stood out. And I think it's the beginning of the end. um, I had sales teams, right? And your sales teams, if nothing else, you want them caffeinated. You really do.
Exactly.
And
Exactly.
so the way my office was set up was basically a huge U. It was an entire floor of an office building. There's a huge U, and in the middle of that U, part of it was this data stacks and stuff. But another part was a huge break area, and inside there, of course, you had lots of refrigerators and vending machines and so on. But you also had we had this just brilliant industrial coffee machine, and it was just, I mean, we went through coffee like it was going out of style. And I'm not going to go out and tell people like you have to drink caffeine, but yeah, I mean, everybody drank a lot of coffee all the time, and we performed, and we stayed energized for 9 or 10 hours a day and executed. And I want to say it was almost exactly 2 weeks after the ink was dry on the acquisition. I got the word that my coffee budget was gone, and I called down. I knew the new so the southeastern region of AT&T had its own CEO, which used to be my boss. So I knew him, and so I talked not to him, but I talked to his administrative person, and it was like, are you crazy? We spend $2,000 a month on this. We generate $100 million a year. What on earth do you care? We spend $20,000 a year on come on, and it was it's cut. And after that, it was just, I mean, it was just nitpicking. I will say I get some of that. The problem that comes, common sense stuff, and like I said, the private equity folks don't have direct relationships generally with the teams, right? So they have a direct relationship with the highest level of the company, merging or acquiring or investing in, but they really don't see further down, and they're generally insulated from those types of things. And I think that it might be a necessary evil, but I think you lose a lot in that process. So anyway, that's it.
Exactly. Exactly. I can totally feel that, you know. what should I say? You just remind. I mean, say listening to you reminded me of my previous years as a corporate employee myself.
Mm.
Anyhow, it reminded me of what was happening in all those years before I started my own business, to be very honest. And I'm doing great right now. But that's a different story again. But yes, nitty gritty, tiny expense cuts. I mean, say, what on earth is going on? You take coffee from a person, you take his life. Uh,
Pretty much. Certainly a person
it,
that want to be, high energy. So
I mean, say, at least a little bit of courtesy for the coffee, uh, I would say. But anyhow, this is how these. I mean, say, see, to be very honest with you, what happens in the they don't see they are just doing what for the current phase. I mean, say they're just thinking about the present. They're not thinking about the future. If they are, I mean, say if they are trying to, you know, they do not think of the future, and they just try to stay in the present, and they slowly take away small things and make their employees unhappy. Some people will start leaving the organization, and once that is done, that wouldn't take them. uh, the thing what I want to say is, it will not take them very far.
well, it will. So I mean, you've got there's a model that works for the investors, right? So in this case, let's just say that it is a 20% return that they were looking for. These guys, so Silver Lake and Affinity, they know how to get that. They're gonna get whatever their goal is. I mean, yeah, they're gonna lose sometimes, but far more often they're going to win, and they know how to do it. That model does not consider the longevity of the organization, unless that's the type of investment they're making, which typically they aren't. Uh,
Exactly.
it's
Strong point.
considering whatever monetary return they're looking for, they're going to get that. And I don't want to paint these groups as being nefarious or bad. They're not bad. They're doing exactly what they set out to do, which is we've got a pool of money that we've put together through whatever means, and we're going to give it to strategic businesses so that we can get a return, so that we can then do it again and again and again. And this model works and makes a ton of money for a ton of people. I mean, that's the other thing is if you want to kind of flip this coin over, you can say a lot of times private equity preserves businesses that would be gone otherwise, because it gives them that cash infusion that they're so desperate for. And it's not a full elimination. And so there is a different there are multiple ways to look at this. I think my only argument in all of this is I believe from my perspective, I believe that there is a way to execute where you can still get the return and minimize your overall human losses and your creative losses and your institutional knowledge losses. Um, and it's probably at the expense of a certain percent of your eventual return. So that's the unfortunate piece. If you're looking for 20% return in 5 years, I might, say, well, to do it without losing the institutional knowledge and having all these morale issues or minimizing those things might cost you a point. And so that $11 billion return might be more like $10.2 billion or something. And that's not an easy pill to swallow. Uh, Not their job either, right? They're saying we're giving you, just like a bank would loan you money. We're loaning you in essence this money with a predictable return model. The difference is the bank doesn't generally step in and tell you how to run your business, although they will. In this case, these private equity businesses will absolutely tell you what to do. And they have a model that works for what their goal is. Where this is, I mean, I don't want to get too philosophical here, but I feel like maybe it's because I've got kids and I'm reaching an age where I'm starting to think about some of these things a little more. But um, I don't. I think that there's more than just money at stake, and I bet, and I don't know either way, but I'll bet there are private equity companies out there that do have that embedded in their corporate DNA, that are saying, no, we're going to try to make money and do it the right way. And it's a different model. I'd like to know that. I'd like to see it. I'd like to be a part of that. Um, I don't know that for some reason, I keep flashing back to the movie Wall Street. Do you remember that movie with Michael Douglas from the 80s? You know, effectively, this is so in that movie with Charlie Sheen, there's an airline being purchased with the goal of, basically just stripping it down to make it super lean so you can sell it off and make some money. But a bunch of people are going to lose their jobs, and it's a little bit of that. We don't hear about it as much now. I know in the 80s that was huge, but it's a little bit of that I think you still have to care about people. And I hope to, at whatever point I decide to hang up my jacket and stop working, uh, I hope that I can feel good about the things that I did, even if I am not feeling good from the driver's seat of a Ferrari. I think there's a better way to do it. What was that?
Oh, it's Diwali.
Oh, is it Diwali? I didn't realize. Oh,
So Diwali, so they have crackers and everything. So
very
that is,
good. All right. Happy Diwali.
thank you so much. And that this is the reason. This is the reason I cannot think of anybody else but you, Kevin, because you have the knowledge, you have the human side, and also you have that emotional human side. I wouldn't say emotions, because in business emotions does not work out well. To be very honest, we have to be from point to point in business. I know that. I know that. I totally agree with that point. But there is also an humanitarian aspect, and we I needed someone to explain these deals who is a master of all these things. And you have my respects today, Kevin. The way you have explained things in the ideas which you have given for people to reduce the loss, you have my respects. Quickly moving on to the question which I have for you, which I have written down. Uh, uh, here it is. Um, Kevin, when a $50 billion deal like this happens, it rarely stops there. Do you think this could spark a wave of acquisitions? Maybe companies like Ubisoft, Take Two, or even Square Enix getting caught in similar buyout talks.
Yeah, I'd be shocked if they didn't. Um, yeah, this will just be the first of many. There's again, it's just solidifying what's already, I think, people know. But like I said earlier, I think the large private equity groups internationally, without doubt, are right now actively all looking at these companies. A few years ago, maybe two or 3 years ago, um, oh, I can't remember. Well, we'll just say a couple of companies in the telecom space were working towards merging. They were large. One of them was Five9, and the other, the buying company, I can't think of right now, but I don't know why. I would think it was Zoom, maybe. But as soon as the potential acquisition was discussed, the market, I mean, within minutes was flooded with PE conversation, looking at every telecom company out there. So, and I just know that because I've been aligned with these telecom groups and know a lot of people in that industry. Uh, so, from that, my assumption is that pretty much every meaningful gaming company out there is being looked at right now, probably being contacted and discussed. I don't think anybody's making offers yet, would be my guess, but I'll bet you in no time at all, you're going to see several of these. Nothing to this size, I wouldn't think, but yeah, I think it'll be a whole different thing. And again, like I said at the beginning, I think there's a good and a bad to that. The good is you're going to have a lot of money flowing into the gaming space, so people that operate in that world are going to be are going to be positively impacted, while I do think you're generally going to see it at the cost of creativity. So it's going to be a little bit different. That's my assumption.
Exactly. And absolutely, I agree with that point. Uh, I'm so sorry for the firecrackers it has started.
Oh no, I need you to take the webcam out there. I want to see it. It's awesome.
I mean, it's very fiery outside. Anyhow, it's India. So quickly moving on. I'll for sure show you the fireworks in a video. To be very honest, when it's Diwali, and I promise that. And moving on quickly to the next question. These are critical questions and important as well, and nobody better. I mean, say there is no one else better than you who can answer this in real time. Okay. The main question I have for you is uh, so, Kevin, this is a question, creativity versus profit. So, you have led transformations yourself. So, you know how investors' pressure can shift priorities. Do you think this buyout could push EA away from creative risks and move toward safe money printing franchises like FIFA and Madden?
Right. Yeah, I do. I do. I think that you're probably in the short term, and the short term being 2 to 3 years, I think you're going to see a meaningful reduction, especially as you get 6 to 12 months out or 18 months out. I think you're going to see a meaningful reduction in the lower performing or new or sort of esoteric design. Um, that said, as long as they can level their performance expectations, I think they'll be able to circle back to it. The other aspect of that is they've got to be able to maintain corporate culture throughout. So if they can stay true to who they are today, which is tough, as we've talked about a lot today, if somehow they can, and they can grow in spite of that, they're still going to lose some stuff for sure. But I think that in a couple of years, you could probably see a rebound into the new growth sphere that's not just more of the same. However, the gamble and the concern, the challenge here is that if they aren't meeting whatever their growth model is, then it'll be double and triple down on just those top three big performers, and probably see almost everything else go away.
Exactly, exactly. I totally agree with you on that as well. I mean, say whoever is bringing in money or bringing in profits will stay. Investors, I mean, say people who are investing in this deal, for sure. I mean, say it's practical. They want money. They want returns. They want returns on their investments. And I totally agree with you on that point. The next question, which is a bit I'm not sure if I should be asking you this question or not. A bit kind of a political question. Okay. Um, so the question is, which I have for you, um, risk and regulations. So I have already asked you about this, but uh, let me just ask you in detail about uh, Saudi Arabia's PIF involved in such massive private fundings. Regulators will likely watch this closely. What are the biggest risks or red flags you see in this deal, financially or politically?
You know, unfortunately, unfortunately, Shaq, I'm going to be honest. Uh, uh, in a normal time, and here in the United States, we are not in a normal time. In a normal time, I would say, oh yeah, if the deal even goes through, there's going to be tremendous scrutiny. We're not in a normal time, and we are, our our president is. Let's just say there's no surprise that this deal is coming through right now, uh, and that's not even the fact that Kushner's group is involved, because that certainly adds. But uh, no, this thing will go through with no red tape whatsoever, nothing meaningful. Yeah, we'll have half of our politicians will whine about it, but it'll be glazed over in minutes. There will be this will probably be the easiest large scale uh, you know buyout in U.S. history. It's going to be rubber stamped. Just yeah, I'm calling it what it is.
Awesome. Awesome. Thank you so much for answering that question. Frankly, to be very honest, I feel sometimes I feel like should I be asking this question or not? But thank you so much. With much courage and clarity, only Kevin Gaylord can answer these type of questions. Thank you so much. Yeah, Kevin. I know we are running out of time. I'll just ask two more questions, please.
Sure.
Okay. So the other question, the next question would be lessons for leaders. If you were advising, which I've already asked you, say, let me ask you in detail as well. If you were advising EA's leadership team right now, what would your first piece of advice be as they navigate this high stakes transition?
Be honest. Be painfully honest. Whatever you're not openly restricted to share down to every level. Talk to your people. The CEO of Electronic Arts should be having at least weekly communications, even if they're pre-recorded, something. The leadership team should be, absolutely expected to talk to their teams and their teams and their teams. And everybody needs to know what's going on, because what is happening without question behind the scenes is people are panicking, right? The unknown is scary. And when you start messing with people's money, it's the scariest thing. If you can't take care of yourself and your family, uh, nothing else matters. And so this is first and foremost about honesty and communication. Hopefully, and I don't know anything about the culture at Electronic Arts, but hopefully they've established a good culture and they don't have to scramble to do that now. So they need to, if that's the case, they need to lean into what works, lean into those relationships, and make people know what's going on. If you know there's going to be synergistic reductions in workforce, don't pretend that there's not. I think it's important to talk about. Maybe you don't talk about it with the whole company, but talk about it with the people that are potentially impacted. And I know there's some folks that are probably watching this saying, "Oh, geez, if you do that, then everybody's going to quit." Okay, I understand that, but think of it in terms of how you would want to be treated. Do you want to be left in the dark? Do you want to be afraid and wondering if you should be updating your resume and scouring the job market right now? Wouldn't you rather have some concept of what's going on? And then if you do make it through and you aren't laid off, how much more loyal are you now to this organization that was honest and upfront with you? I don't think that businesses have to be absolutely amorphous and without emotion and without humanity. I think it's actually a lot of what's wrong in the world. I'm not saying, look, I was trying to calculate a couple of months ago. I was having a conversation. So how many people have I, fired over the years or dictated terminations to over the years? And it's a big number. Uh, how many of those people out there would be angry with me personally over it? I think it's a very, very small number. Um, and I hope it's a very small number. And that's because, I mean, I'm just honest with people. You have a real relationship. It it shouldn't just be about the money. There is more going on here. So anyway, humanity has lost its way. That's a different conversation. But I do think that honesty, transparency, constant communication. I mean, my goodness, I said once a week from the CEO, but from the next two or three or four layers down, it should be daily, sometimes multiple times a day. They're getting this information from the internet. They're getting it from their news source, and whatever talking head out there has whatever opinion, and those people might be saying, "Oh, everybody's going to be fired," and now you're freaking out. And all this is going on internally in those 13,000 employees. So manage it. Talk to people. As I said many times on your show, give a damn, right? Don't fake it. Actually, give a damn about people. And if you, I think, is make sure that the leadership team understands what the goals are, what this is going to look like when the dust settles, uh, and get their buy-in. And if you don't have it, go ahead and start replacing those folks, because it is unfair to the much larger teams downstream if you don't. You get that right. That's what I would say.
Exactly, exactly. I totally agree with you, Kevin. And to all the people watching me, especially from New York City, New York, all my friends, I just want to uh, uh, I just want to add to the last points you made, Kevin. Kevin said that he made a list by people whom over the years he have terminated, and most of them, I mean, say a bit, very small number are mad at Kevin. I would say, according to my calculation, Kevin is the leader, is a leader um, with whom nobody can be uh, uh, angry, mad at, because he's the best leader. He is, this is according to me. What I've seen in Kevin is honesty, and straightforwardness, and humanitarian angle. I mean, say he has got that humanitarian side. So according to me, what I want to say is nobody from his company is mad at him or angry at him. People who have worked with him, I really believe they love him as we as Team Shaq podcast uh, love Kevin so much because of the insights he share very honestly, very courageously. He does not hold back. He does not put, he does not tell the half truth. He just get into details of that aspect, and that is why I always tell you, Kevin, you are the kind of leader. If at all I go back to working again, you are the kind of leader I want to work for, and Believe me, Kevin, nobody can be angry with your class and your standard. Nobody can. They always respect you and love you for what you have done for the society. Thank you so much for what you're doing right now and whatever you've done. I have read your profile. I mean, say the awards, and everything. That itself that itself shows what kind of a leader you are. So you're the best person on my show, also in your career. That is what I wanted to add. So nobody, don't think that anybody can be angry if you have terminated. No, nobody is angry. I'm telling this to all my folks from New York, India, and London watching right now. I mean, say their time zones matches this time zone. So I've got a global audience, but people who are watching, Kevin is the best leader I have. I mean, say I wouldn't have brought anybody better than Kevin to answer these questions. And lucky me and lucky Shaq podcast and lucky Shaq podcast followers that Kevin is going to break down each and every detail in the other mergers as well. I mean, say mergers of T-Mobile. I have that schedule with Kevin. I've requested him to explain that as well. But let's quickly wrap up this session. And I have still two questions, Kevin, if you permit. Yeah. So the question is for you, the gamer's perspective. Now, coming to the consumers. Okay. Now we have talked about the business, we've talked about the internal things, we've talked about the employees and everything. Now the consumers, the gamers. Now, from the gamer's lens, do you think we are looking at the future filled with more microtransactions, subscriptions, and paywalls? Could this deal redefine the gaming experience for customers?
I would guess that's all going to depend on the 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 profitability of Electronic Arts moving forward. Um, some of that is inevitable, but I think it's a whatever growth expectations exist in this contract, if they're meeting them, floating around whatever the expectation is, then I would say no. It'll be just keep pushing and pushing and pushing. If they're not, then yeah, you're gonna immediately roll into, okay, we got to bring it in somewhere, so we're gonna do cuts and we're gonna grow through alternative means. So it'll really come down to just how they perform in general. But behind the scenes, the things that we don't know is, do they have plans? So they've got this huge cash infusion. Do they have that we aren't aware of, right? Is there something on the horizon that they needed funding for that's going to change everything? That's going to be the next big thing. And if they do, that may be the avenue. But if not, it could definitely be based on going to microtransactions. They're also in modern times tried and true, and they're annoying, and everybody can't stand them, but they work. They make a lot of money. So it's tough to say.
Great, great. Absolutely. Totally agree with that. And the last question for you, Kevin. Uh, now, now we talk about the future. As you have explained each and everything from the stakeholders to the players involved in this buyout to the political and the financial aspect of this deal. Everything you've explained, awesome. I does not have any lesser word than that. You've explained us each and every detail. You've broken them into simple points, and also explain nitty gritty, tiny details of this deal. So the last question for you, finally, would be: when you zoom out, what does this moment tell us about the future of business? Are we entering an era when entertainment companies are no longer about creativity first, but capital control and strategic domination.
Yeah, I would say we are, and I would say we have been for some time. I don't think this is the first. I think we've seen a genuine decline in creativity in the entertainment space for probably the better part of 20 years. And this is unfortunately, it is another, just another sort of level of that. Uh, like I said earlier in the podcast, it's we're in the era of sequels and remakes. Original content is not as common, and it's not as common specifically because when you get these private equity involvement and there's an expected return, you're not going to have as much flexibility to try something new. So in the United States, I'll actually throw this back and sort of juxtapose it. A couple of years ago, several years ago, there was a big shift in this is around alcohol consumption, but from really just commonplace beer to the craft beer movement, and craft beers being small producers, regional producers of unique tasting beers. They only generally, I forget the actual rules to be considered it, but generally they're supplying to maybe like a small area, a few hundred miles, or possibly in the U.S. a couple of states. But what ended up happening is this: we had this boom in this. Is it completely changed the landscape? It became this grassroots effort uh, to change the landscape of what was available in the common marketplace for beer. So you don't just have the top 4 or 5 companies. All of a sudden, you had 40 or 50 companies, and they became more and more and more prevalent. And that's already kind of come over. It's peaked and come down and plateaued, but it entirely changed the landscape in the process. And so now you have availability of a very diverse selection of this product through this, again, almost grassroots type of movement. I would compare this in the gaming world. I would compare them to say I think we're probably going up right now in terms of monetary investment, but also a reduction in, you know, honest creativity. And I think eventually we'll see something similar where there will be almost this sort of grassroots type effort to bring back or to draw people to more creative, new, forward thinking, just out of the box stuff that's not tried and true, which will then reset the landscape. And I would guesstimate that that process will take, maybe a decade to see its way through. So my crystal ball analysis is in 2035, we'll be at the next layer of innovation in gaming, meaningful innovation, not just the super high dollar, few companies that can survive right now, but I think you're going to see something new, but it's going to take a while.
Awesome. I totally agree with that point of yours. So let's wait until 2035. Hopefully, I'll be in the states then. I really wanna meet you in person, Kevin. Or if possible, if you are planning to come to India, that would my dream come true. That is one thing. But I'll be back. I'll be in the states in the once everything settles down. Right now, mostly my work is remote. Mostly whatever I have done in my life, in my career, I have worked both remote and hybrid. So I'm able to do my work remotely. But I'll definitely want to meet you, and thank you so much, Kevin. Nobody else could have explained this deal in such detail and with such precision. And also, you have made sure that you keep up with the humanitarian side of people. I mean, say there are human lives involved. You also took uh, 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 you know you also explained the steps how we can control the layoffs and also the human livelihood losses, how to control that as well. Thank you so much for explaining that. And before I close the call, before I wrap up the session, just want to say, Kevin, that it was an incredible deep dive. You have taken a $50 billion headline and turned it into wisdom, helping us see the strategy, the stakes, and the human impact behind the numbers. Your clarity, your perspective, and your calm understanding of complexity truly make you one of the finest, I mean, say exceptional, illustrious, finest business minds I have ever spoken with. And that is I'm telling you from heart, to be very honest. You know, my English can be weak. I mean, say I have some, English is not my first language, but you could understand the words coming out of my heart. You're the finest business minds I have ever spoken with. Thank you for joining me today and sharing your brilliance with the Shaq podcast family. And to everyone listening, remember, deals like this aren't just about money. They are about power, leadership, and the way decisions at the top ripple down to affect us all. If you found value in today's conversation, don't forget to like, share, and follow so you never miss out the next big story we break down together. Until next time, stay curious, stay bold, and as always, keep learning how money, leadership, and purpose shape our world. Kevin, once again, thank you. It's been an honor.
Thank you, Shaq. Always a pleasure.